rabid user base in their direct IPO product. Do you think that had some sort of impact here, or the summer? What do you think is going on here?
I think there's a lot of things that went into this, but that's the most interesting one, because when Robinhood announced they were going to open up IPO access for their users, people were stoked. Like, oh my gosh, we finally get to have similar footing to these large investing groups. But suddenly, if you take away a big chunk of an early retail demand, you really change up the supply-demand curve. And I think, frankly, traders on platforms like Robinhood probably were pretty active in trading IPOs in general. So if they have shares at the IPO price, it probably reduces the frenzy around first trades and makes it maybe harder to have an expensive pop. Now, Jason, Bill Gurley is going to love this because all of a sudden doesn't seem to whine about it. But Robinhood probably expected a little bit more after pricing at the bottom end of its range.
Does seem to be a big disjoint, a big disconnect between what the press is reporting and what we as the investment community, and we have both represented here, and to a certain extent I represent both, having been a former journalist, there's this big gap between, oh my God, the IPO pop, and that being the definition of success, and then what we all experience as investors, which is, I invest in the company where it's, I think, $30 million. So 30 million to 30 billion, don't take a genius to do the math, a little bit of dilution. This is a 500x or one pretty great return, even with dilution, because I didn't continue investing in my pro rata, because I didn't do that back then. Yeah,
you could have bought like another 2 houses.
Exactly.
That's a costly bit of financial conservatism.
Well, it's one of the things about investing is you can learn from your mistakes. When I started, I was putting 25, 50K checks into companies like this, and then just
walking away.
I'll see you in 10 years.
Yeah.
Now we had 2 companies in our portfolio that were raising at 300 and 600 million. We own 10% of the company. They're raising 30 million. So our pro rata is 10%, a ballpark of that 30 million.
Sure.
And we actually filled with our syndicate and our LPs with SPVs, special purpose vehicles, those $3 million bets to keep our 10% ownership in, companies that were worth 300 and 600 million. We had 5 to 10% ownership. So we're actually maintaining ownership at those big numbers. And so hopefully that pays off. But what do you think that disconnect is about, where on CNBC, they're just like, oh my God, it didn't pop. And aren't we supposed to price these things so they don't pop? What does it say that it does pop?
Yeah. So I talk to a lot of CEOs on IPO days. So I've done just over the years, dozens of these calls with people that are literally sitting there in the room watching their stock begin to trade. And I've managed to learn around the edges how they think about pops. Every CEO taking a company public wants to see 10 to 15% gains in the first day. It makes them look really good. It gives their employees something to be proud about. All the investors, they just had to lock in for the long term during their roadshow they sold shares to, have a great first day. It really just like smooths butter over the entire piece of bread. And I don't mind that. I don't mind the mechanism. Now, IPOs are anachronistic to some degree given how they're done. But the media and cable news, I would not conflate, because I don't watch cable news at all. Because I don't have time to waste on that. And I would not say that tracking the views of different CNN anchors or CNBC anchors is the way to gauge media sentiment, because Jim Cramer is very loud. And I don't think he's indicative of what I do or what you used to do, Jason.
Yeah. So I do think there is something to that nuance where if you're on TV and you have the ticker, you have something to measure. The entire point of CNBC or Bloomberg is up to the minute. And if you want something up to the minute, having a data feed that you get to feel the pulse on makes it feel more live, just like the score in a basketball game.
Absolutely.
You tune in and it's on the screen, it's moving up and down. So you have a scorecard. It is one of the appeals, but I think there's this misconception that this would be a failure or a win plus or minus 10%. Actually, to the majority of people who hold shares, it doesn't actually matter. It certainly doesn't matter to me, because the way I look at this now, and I'm curious your thoughts, the putting aside any of the trip ups that Robin had with GameStop, and we could talk about those, obviously.
Yeah.
But putting that aside, when you look at the actual metrics of this, it was 18 million when they filed their S1 in terms of accounts, 17% were active every month or something. And then you had this incredible revelation that now they're 22 million. So maybe you could speak to the scope of, or the scale of this company and what you think is possible.
Yeah, I think if you look back to the start of 2020, and then if you told us where we were going to be today, we would be very confused about what changed. But there was, during the pandemic, an enormous boom in savings and investing activity amongst consumers. This drove Robinhood, it drove M1 Finance, it drove eToro around the world. Coinbase got an enormous lift from this. Even Bitcoin began to trade better. People just had a lot of cash. Like, Jason, you didn't leave your house for a while.
Yes.
I didn't. And I spent no money. I went grocery shopping once a week and I just ate bananas. Like I just saved money. And so people put that to work. And so Robinhood is enjoying this enormous boom, not just in the appreciation of the value of the stock market and crypto trading in general, but also just folks having cash. So Robinhood
it's so
is
true.
enormous.
Just as one aside, think about all the money we save not going on vacation or business trips or conferences. I looked at those three and I was like, for me, I was doing 4 speaking gigs a year. All of that's business class travel and really great hotels. All that money just didn't actually flow during this.
Verizon never put me in business class. I just want to say, and then they sold me to Apollo. Yeah, I protest. No, I mean,
who owns TechCrunch now?
It's still Verizon Media Group until the Apollo deal closes, and then will be owned by. It'll be called Yahoo, I think. Again, when
you'll be Yahoo. But am I correct that it's a private equity firm now owns Engadget and TechCrunch?
Well, the deal has been announced and agreed on, but hasn't yet closed. So we're in that awkward period in which, like, you broke up with someone, but you still live in the same house. That's where we're at.
Just as we're in this on this tangent,
sure.
What does that mean in terms of like management of your brand? Is there are you guys just off on this island, just doing the best you can, or is there somebody like we have to hit these numbers and there's a sense of urgency?
So TechCrunch's culture, this is my second time at TC, so I have 2 different kind of blocks of time at the organization. The ethos of TC has been preserved through all of the corporate Sturm und Drang. And so I'm optimistic that we're going to hold on to it again post-Apollo. Private equity has a reputation for a reason, so I'm not going to promise anything, Jason. But today, I freaking love TC. I still have the independence and freedom and flexibility and support, and it's great. Frankly, I'm happy. I'm nervous because I'm being sold. We'll have to see how that shakes out.
I was hoping that I made a salvo in between the AOL and Verizon days of, hey, any chance I could shake off Engadget or Autoblog? And they're like, yeah, we don't know who you'd even talk to about that. I'm like, okay, try to see if I can, or even TechCrunch. I was like, I'll take all of these brands. Would you have are they for sale? And they're like, we don't know. I'm like, who knows? They're like, nobody. Said,
well, it turns out the whole package was for sale and we're being sold, and you'll love this, Jason, for roughly 0.5 revenue. That's our multiple, is 0.5. Not 13, not 27, 0.5.
0.5 times revenue. Yeah, we're makes on $2 billion, and
we were doing 8.4 billion run rate as of Q2, Verizon Media Group, now Yahoo, and we're being sold for $5 billion.
That is a perfect private equity moment because they could split these things up and then sell them in packages. And that's probably what will happen is Yahoo will go to somebody, the TechCrunch and Gadget brands will go to somebody. It's a smart move on their part. Are you getting a little sick of the cloud wars? Aren't we all? It's time for you to cut your cloud bill in half. Get amazing customer support and save $100 right now. It's time for you to grow your business on Linode, Linode. If you're old school, Linode, no matter what kind of business you're running, whether it's a streaming app, an e-learning platform, or anything using machine learning, you need reliable infrastructure and hosting. Linode offers simple, affordable, and accessible cloud computing solutions. Why use Linode instead of the competition? There's no lock-in. You can change services as you please, and pricing predictability. They don't charge based on bandwidth usage. This is going to save you up to 50% from other major providers. And they've been around for 17 years, so they know what they're doing. They've been doing this forever. We use Linode for hosting This Week in Startups Australia, and it is absolutely fantastic. We get 24/7 human support with no tiers or handoffs. That's why Linode is the leading independent public cloud provider. See if you can cut your cloud bill in half today and save $100 at linode.com/twist. That's linode.com/twist to create an account and receive that $100 credit. Okay, let's get back to this amazing episode.